Uh, Andrew here. It's really interesting for me to do a webinar during the trading room and during market hours because I will be trading as we kind of go through here and as I see signals are going across the tape. So what today is I'm going to give a presentation. It's called Hidden Market Reveals, Confessions from a Floor Trader. I'll be your presenter over the next hour. If you guys have any questions throughout the presentation, feel free to ask any questions. I'm a real money trader. I trade with my own money. I do not take any outside capital. I trade a lot. I'm a very active trader. I trade options. 95% of my trading is options. Do a little bit of stock, but mostly are options. I do a lot of different trades and options. I do calls outright, puts outrights, put spreads, call spreads, iron butterflies, iron condors. And what I'm going to teach you guys today is how to trade options and why to trade options. Little risk disclaimer, I have to put this in every single webinar. Day trading, short-term trading is an extremely risky undertaking. It is generally not appropriate for someone with little to no little capital. Always know how much you're willing to risk. If I call out a signal and I lose money, that's my own money. But you guys should realize that every single trade involves risk, and I am not a registered investment advisor. I cannot give recommendations or advice. What I can offer you is my opinion, which I think is much more valuable. But with that said, everybody has to know how much money they're willing to risk on any trade. So today's schedule, I'm going to teach everything. I'm going to teach you guys everything about calls and puts. So we're going to go from basic 101 of what a call is, what a put is, how you can buy calls, you can sell calls, you can buy puts, you can sell puts. I'm going to explain the Greeks to you very briefly. And then we're going to teach you guys what I think, in my opinion, is the best way to trade, which obviously when the market just continues to go up and up and up and up for eternity, is buying call options. With that said, here's a picture of me on the trading floor. This was probably circa like 2006. This is a program called MicroHedge we have here. This is Ready Plus. You can see actually Melissa Lee is on the TV for Fast Money Halftime Report. Then all the screens were up there. This is the person that backed me on the trading floor. His name is Craig Luce, LCE, and he is my backer when I traded on the trading floor. I was down there from about 2002 to 2011, so I was down there for about a decade. I had left the trading floor when the option market became penny wide and weekly options got introduced. It killed it as a market maker. They basically took all our margins away, and it's the greatest time ever for retail trader, but the worst time ever for a market maker. So I was down there for about a decade. I made millions of dollars as a professional trader on the trading floor. Sometimes weird for me to say that I'm a multimillionaire from trading, but I'm a multimillionaire from trading, not from running a business, not from an inheritance. And what I'm here to do is to teach you guys how I trade and what options are, why you should use options. Here is some stuff back in the day. CNBC, Bloomberg, Fox Business, SIBO TV. I used to be on TV almost every single day. I have stopped being on TV. When I was in Chicago, I thought it would be fun to be on TV. Once you're on CNBC one time or 100 times, unless you're getting paid by CNBC, it just takes a lot of time. And that's 30 minutes of the day that I could be doing something else because I would have to prep notes for them. And then I'd have to send my notes, go over to the SIBO, sit there, and then half my interviews would get bumped because Obama wanted to talk about the Final Four. So I used to be on TV a lot, not on TV that much anymore. I've written a bunch of books on trading, and this is me in a nutshell. So let's talk about what an option is. So I'm going to take you guys from basic what an option is and into complex strategies and teach you guys why buying out of the money calls is the best risk versus reward setup out there. So an option is a contract that gives the owner, the buyer, but not the owner, but not right to buy a stock of a specific number of shares at a fixed price, known as a strike price, by a fixed expiration. When we're trading options, one option is 100 shares of stock. They used to introduce the minis, and the minis was one option is 10 shares of stock. People realize, why would I do this? And basically, we just have two kinds of options. That's it. We have a call option and we have a put option. A call option is a contract that gives the buyer the option, but not right, to purchase a fixed number of shares. So one contract, 100 shares, on or before a set expiration price. The buyer pays the premium to the seller. A couple of things that are interesting on this slide. It is the right, but not obligation. okay? And it is fixed price, so this is strike price, on and before expiration, okay? So when I buy a call option, I do not have to exercise my right early, and I do not have to take that right at all. And we'll go through a couple examples on it today. A put option is a complete opposite of a call option. So if a call option, it gives you the right to buy stock, okay? Buy stock. This gives you the right to sell stock. So what a put option is a contract. So based in the 1970s, call options got introduced. Then a couple really smart people started realizing there's something called basically call put synthetics, where I could buy a call option, short stock, and create a put option. So what a put option is, it gives the contract, the buyer, the right but not obligation to sell a fixed number of shares at a fixed price on or before expiration. Once again, obligation, right but not obligation, and also expiration and fixed price. So if you buy one call option, let's say you came in here, and this is my Thinkorswim account, and let's say you came in here and you wanted to buy, I don't know, Uber, the 71 calls that expire tomorrow. You go to Uber. So if you wanted to buy the Uber 71 calls for, let's say, 95 cents, so this would give you the right but obligation to control 100 shares of Uber between today and the end of the week. And for that right, you'd pay $95 or $95 per one lot. If Uber goes to $800, you can buy stock at 71. Okay, so it gives you the right but not obligation to buy stock. On the flip side, if you buy a put, it gives you the right but not obligation to sell stock. And that is the difference between a call and a put here. Calls and puts. Think about what a call is. Buying calls gives you limited risk. Reward is unlimited. If you sell calls, your risk is unlimited and your reward is what you sell it for. So when you buy an option, the most you can ever lose is what you pay for the option. If you sell an option, the most you can ever make is the amount you sell it for. So in theory, is it better to buy or sell options? Obviously, it's better to buy options because we know how much we can risk is what we pay for that option. If we sell a put, our risk is the strike price minus the amount we sold it for. Our reward is what we sold the put for. If we buy puts, our risk is what we pay for the option, and our reward is the strike price minus the amount we paid for the put. So notice, guys, when we buy an option, okay, we can buy calls or we can buy puts. Things that are important here, limited risk, limited risk. In theory, calls have more upside than puts because there's unlimited upside potential. Reward here, stocks can only go to zero to the downside. So it is the strike price minus the amount we sold the put for. So in theory, if we had to do a risk versus reward setup, what is the best setup possible? It is buying calls because you risk a little bit to potentially make unlimited amounts. If you sell calls, that is your worst trade setup as a reward to risk setup. Your risk is unlimited, and the most you can ever make is what you sell the call for. Stocks, in theory, can go to 1 million. That happened with GME. It's called the short squeeze, right? And stocks can go to 1 million, but the most you can ever make is what you sell these call for. When you sell puts, stocks can only go to zero. So you are actually capped to the downside. So if we had to break this down on what is the best reward to risk setup, buying calls is number one. Buying puts is number two. Selling puts is number three. And then selling calls is number four. That is your breakdown of reward to risk from best to worst. Buying calls number one, buying puts number two, selling puts number three, and then selling calls number four. That is your best reward to risk setups of anything out there. I'm actually trying to put on a position right now in the KRE. I'm trying to get shorter. No, they're not. It's not cheap enough. Market's just going straight higher. KRE up on the day. Okay, so in order, as we just said, our best setup, hands down, bar none, is buying calls. Okay, I did two calls yesterday for our personal portfolio subscribers, and on the calls yesterday, I um, on the calls yesterday, I made 50% profit. And they were cheap options. They went from 10 cents to 15 cents in AMC. If an option goes from 10 cents to 15 cents, that is 50% profit. And then we also had Macy's calls were bought yesterday. Those went from 12 to 18. They actually went up to 24. That was another 50% profit. So 50% profit yesterday on two signals that I called out in the live trading room. Second best setup is buying puts. Why? Because our risk is what we pay for the put. And most we can make is the strike minus what we pay for the put. Number three, selling puts. And then our worst reward to risk setup is selling calls. Okay. So these are the best setups: buying calls, selling puts, buying calls, buying puts, selling calls, selling puts, and then selling calls. Reward to risk setup, those are your best. Also, we combine the fact that the market, this is actual a fact. The stock market goes up 85% of the time. That is a fact. I repeat, the stock market goes up 85% of the time. Which of these scenarios are bullish? Bullish, buying calls. Bullish, selling puts. So now we combine the best reward to risk setup, which is buying calls, also with the fact that the market goes up 85% of the time. We clearly know, hands down, the best winning trade for us to do is buying calls. Simple and easy. The best reward to risk setup, there's nobody in this world that can debate that. Also, 85% of the time market goes up. S&P 500 futures are over 5,000 today. That is wild. Okay. I didn't think that we'd ever see that day, but we have. So buying calls is going to be our best bet. And combine that with the fact the market always goes up. Not always, but here is a graph. And this is a simple graph of a long stock. This is simple and easy. Let's say you're long XYZ stock at $20. Okay. Every dollar goes up, you make a buck. Every dollar goes down, you lose a buck. And to the upside, you can make unlimited. To the downside, you can only lose what you paid for this. And a lot of times we say, like a lot of the hedge fund managers are not shorting stocks anymore. And we'll show you why they're not shorting stocks. It's due to the fact that they can lose unlimited. And to the downside, they can only make to zero. This is a long call graph. This goes up infinity. This can go up in theory, like GameStop did, to 500. I don't even know how high GameStop got, 700 or something like that. And you can only lose to zero. So this is a long stock. We'll show you a chart of a long call, which is very, very similar. This is short stock. Short stock, we have unlimited downside potential. A lot of hedge fund managers do not short stock anymore. Why? Because when they short a stock, the most they can ever make is what they shorted the stock for. This is a graph of a short stock. You shorted the XYZ stock at 20 bucks. It can go to zero, so you can only make 20 bucks on it. And to the upside, you can lose all your money. And if you guys saw the big Dumb Money, I watched that one, and it's basically talking about how a Fed hedge fund was shorting stock, and it can go to infinity, right? And that's just a fact. So shorting stock, risk, risk, risk. This is an example of a long call option, very similar to a long stock option, but our risk is capped a lot less. So here, a long call option. This is buying the 20 calls for about $6, maybe $7. Here's your break even, $27. To the upside, once again, unlimited upside potential. Imagine if you bought NVIDIA calls when NVIDIA is $200 or $300 or $400 or even $500. Okay. This means unlimited upside potential. And once again, we showed you on the charts earlier, the most you can ever lose when you buy a call is what the price you pay for that call option. Okay. So the most you can ever lose is what you pay for that call option. I just have to do one thing in Tesla here. Okay. So most you can ever lose is what you pay for that call option. And you can see here, great. Reward risk basis is unbelievable here. Here is the Greeks of a long call. The Greeks of a long call, as we can see here, this is our delta. Our delta is always positive when we're long calls. When we are buying calls, we want the stock to go up. So we want the stock to go up. Our gamma is also going to be positive. If our gamma is positive, then our theta is negative. The one downfall of buying calls over and over again is if you buy call options, the calls will have a time decay on that. That means that the stock can go up and you can actually lose money due to time decay. Think of it very similar to car insurance policy. If you pay $1,200 a year and you can break that down, you can say that's $100 a month. You can break that down, you can say that's $3 a day. If you go on vacation for a week, you don't cancel your car insurance policy. You have to pay those 7 days when you're gone. So you lost $20 worth of car insurance policy. So Greeks, I don't want to focus on the Greeks so much. Just understand if you're a long call options, okay? If you're long call options, you're long gamma, you're long delta, you're short theta, okay? That's very important to understand. Short call options, okay? A short call option is the complete opposite. This is when we have danger, danger zone. If you sell a call naked, let's say I came into here and I wanted to sell, let's say I'm crazy and I sold the NVIDIA. I sold the NVIDIA 700 call naked for this week. If I sold the NVIDIA 700 call naked for this week, I get $7.60. The most I can ever make is $7.60. In theory, NVIDIA could go to $1,000 tomorrow. So I can lose unlimited, but I can only make $7.60. So selling calls is your worst reward to risk setup. Yes, if you have unlimited money, you can do it. Yes, if you have long stock against your position, you can do it as well. But that is your worst reward to risk setup. Your worst reward to risk setup is selling calls naked. Let's talk about what a put option is. Okay, a put option, we talked about it earlier. What a put option is a contract that gives the right, but not obligation, to sell a fixed number of shares at a fixed price on or before expiration. The seller will then pay. The seller collects money, the buyer pays money. Okay, so this is what a put option is. It is the right but not obligation to sell a fixed number of shares, which is one contract is 100 shares at a fixed price before or on expiration. The buyer pays premium to the seller for that option. So let's say you thought NVIDIA was going to crash and burn. You can buy the NVIDIA 690 put, let's say $8. So this is going to cost you $800 per one lot. This gives you the right but not obligation to sell 100 shares in NVIDIA at 690 on or before expiration. And for that right, you pay $8. One contract is times 100 because it is 100 shares of stock. NVIDIA goes to 650, that put option would be worth $40. You'd make, 500% on your capital. That's a good trade. But if NVIDIA is flat, goes up, or doesn't go lower, you lose your whole premium levels on that. So when we're buying puts or we're buying calls, the downside is we are paying a theta, okay? We need that stock to move. But on a reward risk basis, it is a great, great setup. So here's a long put, and you can see here on a long put, the most you can ever make is the strike price minus you pay for the put. These stocks can go to zero. Believe it or not, stocks cannot go to negative. Okay, so this is buying a put option because you think the stock's going to go down. If you're bullish, buy calls, sell put spreads. If you're bearish, buy puts or sell call spreads. Simple and easy. So here is a short put. I do these every so often, not like that much, but this is selling puts naked. Like last week on Thursday, I sold the Peloton 4 puts naked for 6 cents. I said, hey, I'll take 1,000 shares of Peloton at $3.94, or I'll take stock, 1,000 shares of stock at $4. So I do this every once in a while. Nothing crazy, not too much. But this is selling a put naked. if I'm willing to own the stock lower, then I could sell a put. So like, let's say NVIDIA, and I wanted to sell the NVIDIA 650 puts for the Friday. The 650 put is, let's just do the 660 put. So the 660 put, 660 put's like $1. So basically, I will collect $100 in NVIDIA as long as it's above $660 on Friday. And then if it's under 660, I will be put the stock, which means I'll own 100 shares in NVIDIA at 660. It's trading 695. So selling puts is what you do if you want to establish a long stock position, because you're basically getting the stock at a discount. So if you want to establish a long stock position, you can do that by selling out of the money puts. That is more of a position than it is a trade. I don't really consider that a trade. I consider that a position. So combine these two markets together, and we will now know that buying calls is the best strategy. Number one, it is bullish. I want to see how many slides we have. Number two, it is our best reward to risk setup. So buying calls is our best reward to risk setup out there, hands down, bar none. Simple and easy. Okay. That is our best reward to risk setup. Buying call options. Number one, you risk a little bit to make a lot. Number two, 85% of the time the market goes up. So this is our best setup. So you say to yourself, I want to learn how to trade. How can I learn how to trade? Well, I'll be honest, we run one of the biggest live trading rooms in the world of full audio and visual, and we're going to give you an opportunity to join our trading room community. The live trading room runs from 9 in the morning Eastern to 4 p.m. Eastern. We have 4 moderators running the room. AK, which is me. I'm on for opening bell 4 days a week for an hour, full audio and visual. Through the course of the history of this room, we've sold over 7,000 subscriptions with the help of Agora. I'm now independent of Agora, so I do not work with them, but I've taken the room over, and we're giving you an opportunity to come into the room and join like-minded traders. Okay. If you trade on your own, it's very, very hard. It's lonely. We're going to give you an opportunity to join the live trading room. So let me ask you guys a question, and you can answer this however you want, however you feel. Do you think that insider trading exists? You can shake your head yes. You can shake your head no. You can have your own opinion. Obviously, we said if someone says, yes, I think insider trading does exist. I have my own opinion. But the way that I trade is completely different of anybody you're going to listen to today. All I do is follow the big money. I wait for traders to place and allocate capital on certain trades, then I mimic that trader's trades. Simple and easy, guys. So I'm not trying to recreate the wheel. I'm not making up a pattern on a chart. I'm not using technical analysis. All I'm doing is watching for the biggest and best traders in the world to place a bet. And then what I'll do is I'll follow and mimic their position, and I'll take the same trade as that. So I currently have spent close to $1 million to bring these tools to a retail trader. We do sell proprietary-based scanners in the derivative space. We sell about 8 of those, and I license the technology, so I have to pay for that technology every single month to the CBOE, and we brought these to retail traders. In the live trading room, I focus on all these signals. Like I'll show you some of these scanners that we use. This one is called Option Hacker. So this one's the creme de la creme. This scanner is $500 a month. There is nowhere else in the world you can buy this scanner except from me at optionhacker.com. For example, this signal today in OI, that went up 50%. This signal in Nova, I think this went up 50% as well. Okay. So all I do is follow order flow in the derivative space. I follow the biggest and best traders in the world, and then I just wait for them to put on trades. I mimic their positions. And this is what has hit 1, 2, 3, 4, 5, 6, 7. 7 signals hit Option Hacker today. When you join, not if you join the live trading room, you'll get access to the signals throughout the first hour of the day. So I will announce these signals during the morning, and I'll talk about if I'm placing a trade with my own money on certain signals. So once again, guys, you never have to trade alone because we're going to let you join with one of the best communities in the world. Most traders, unfortunately, are swimming against the herd. Or actually, this is it should be a salmon. Salmon swim downstream when everything else is upstream, right? So this is most swimmers. This is probably most of you. You guys, give yourself a little pat on the back, give yourself a little applause. You've taken the first step to make yourself a successful trader. Okay. And the first step to make yourself a successful trader is to show up to a free webinar. But most of you guys will not take action. That's just the way it is. You go to the free webinar, you say this is great, but then you don't take the next step. If you like what I have to say, I'm going to give you an opportunity to join for less than $3 a day. I have an expensive lifestyle. I'll spend $14 on juice. I usually spend $6 on coffee every day. I spend $30 on lunch. So we're going to give you an opportunity to join our live trading room community. And I say do it for a month, okay? Because we've been running the room for 13 years and I'm not going anywhere anytime soon. So most traders swim this way. That's why they lose money. I trade completely different of anybody else. All I do is follow order flow in the derivative space. That's it, guys. The way that I trade is the easiest and simplest way out there. I don't watch news. I don't see what's going on. All I say is show me a trade that hits the tape, and I'll decide if I want to put my money to work. And not every trade's going to be a winner, obviously. Some trades, believe it or not, actually lose money. What? AK, you lose money on trades? Yes, not every trade is going to be a winner. But there's a reason that I've been doing this for 23 years, and I have one of the biggest live communities in the world. It's not going anywhere, guys. And we show traders how to trade options. You can get in these trades for as cheap as less than $100. Some trades you can get it for less than $100. So here's an example of one of our scanners. We flagged this to subscribers of the trading room. And let's go over the signal here. There's a buyer of 2,344 at Macy's, 12/15, 2023, 17 and a half calls for 32 cents. So some trader, how do you get the big insiders trades, insiders level 2 or 3? No, I run my own proprietary based scanners that I license the technology from the CBO. None of that other stuff is good. Anything on any of your brokerage platforms is garbage. So this, some trader buys 2,300 Macy's calls for 32 cents. I came in on December 5th. I said, this is a good signal. We're going to take this signal. Remember, long calls, guys. The most I can ever lose is what I pay for the calls. So buy the Macy's 12/15, 2023, 17 and a half calls. And you could have bought those for 33 cents or $33 per one lot. Okay. Could have got those for $33 per one lot on the signal. Let's see what happens to Macy's. This is the volume spike. Okay, so volume spike in Macy's, big buyer of calls. We said, hey, this is a signal. We like this signal. We're going to take the signal. Let's buy the same call option that trader buys. Maybe they know something. Well, what happens? Stock goes straight higher. Pure coincidence? I'll let you decide that. Does trader know something? I'll let you decide that. But the stock went straight higher. Then 6 days later, we said with Macy's trading up to 2010, you can now sell your Macy's calls that we bought for 32 cents for $2.60. Obviously, not every trade is going to be this easy, but this one was an 800% profit in the course of a couple of days. 800% profit in the course of a couple of days. So this is how I started my career at the floor of the CBOE. As you can see here, I had a bunch of job interviews, registered investment advisor, investment banker, and then a trading clerk. And investment banker obviously pays a lot more money. As a trading clerk, they offered me $2,000 per month, $24,000 a year. I was poor. I was living in my parents' house. I had to live at home because I couldn't afford anything. As you can see here, my parents weren't exactly happy about my decision because I could have made $80,000 being an investment banker. But I said, I want to learn how to trade. My dad said, every day is different. You're going to love trading. So I took the plunge. was poor, making $2,000 a month. I was making money every year and more money by the year before. Do you send us email and text the signals to buy if we can't be in the room? We do offer other services. We'll send you the text. But what we have today, we do not. But we do have other services that we send you texts. So what happened was I was making more money than the year before. Then one day, I blew out my trading account. I lost $494,000 in a company called AMAG, pharmaceutical company. Okay, it was not a pretty day. It's not a pretty sight. And it wasn't like one day I lost all my money. It was like paper cuts of losing $30,000 a day. I have to see what the signal is. WPC. So we're seeing a signal right now in WPC, a call option, WPC. So WPC, I've never heard of the stock. These are March 65s. And I lost $494,000 in this stock. Okay. Well, what did I do? I moved to Thailand. So let me just show you guys this one. So WPC, if you want your first trade, you can take WPC, the 65s in March. Yeah, I'm not going to take this trade. March 65s in WPC. I don't even know this company does. Yeah, I'm not going to take it. So what I do, I blew out my trading account, and then I went to Thailand and started teaching English in a Buddhist monastery. You can see the date. This was 2007. And I was happy, right? Because I was teaching, I was educating. And this is in Thailand. I was born in 79, so I was 28 at the time. And I didn't know what I wanted to do. But what I did is I came back and I basically took my account and made millions of dollars of trading. Sometimes it's weird for me to say that I'm a multimillionaire from trading, but I'm a multimillionaire from trading, not from a trust fund, not from running a business, from trading. And, I could retire today. I invest a lot of money in structured notes, but I would be bored. I would have nothing to do. I get bored very easily, and I don't want to do that. Okay. I'm here to teach and educate you guys. And like I said, I don't need to do this. I want to do this. This is like my calling is to teach and educate people how to trade properly. There's a lot of gurus in the space. There's a lot of really good gurus that can teach and help educate you. There's a lot of really bad ones too. I always say you should ask somebody how often they trade, do they trade with a real account, and show me some profitability, right? Because, I know how much money I've made over the years trading, and I trade usually about 2 hours a day, 4 days a week. But I'm actually on my computer a lot more, so I don't know how much I actually trade. But I'm trading right now. I almost took that signal in WPC. So normal trader trades 5 contracts, 10 contracts, 20 contracts, and a big trader will go buy 5,000 contracts. So like this trade right here, trader bought 1,189. This is about a $60,000 bet. So, if Warren Buffett, if Carl Icahn, they obviously don't know who Andrew Keene is. They said to me, hey, AK, I'm going to put a $60,000 bet in WPC. Do you want a piece of the action? Are you in for 50 bucks, 500 bucks, 5,000 bucks? I would say you're Warren Buffett. Of course I'm in. So we're watching the biggest and best traders in the world. Okay. I spend about $12,000 a month on scanners. I do it so you guys do not have to. So let's talk about the way the Wall Street tricks are played. So institutional traders employed by a Wall Street bank, they're usually trading with firm capital. They have a long track record of profitability. They have access to information that we do not have as a retail trader. I go back to this question, is basically, do you think that traders trade on insider information? And I'll let you answer the question. Buyout rumors, earnings leaks, large hedge fund trades. And they have access to non-public information that we do not have as retail traders. There's been articles on Zacks, MarketWise, Wall Street Journal, TheStreet.com, and Fidelity. So this is the Wall Street tricks to make them make money on their derivative bet. Brokers will push the stock to clients. Mutual funds will then take positions in the stocks after the traders put on a position. Market makers will then bid up shares of stock. Analysts issue upgrades. Positive stories are released to financial media. Goldman Sachs, a couple years ago, said they had profitable trading on 236 of 252 days. And isn't that mathematically impossible to have profitable trading days of 236 of 252 trading days? And the answer is they're just using the tricks of the Wall Street ways. They buy a call option, they'll push that stock to their customers. Market makers will bid it up. Then news is reported. Unusual option activity, which is what I trade, which is order flow in the derivative space, have a profound impact on stock prices. Buying can sell a stock higher. Selling can send a stock lower. NASDAQ.com said there are very few things that can move a stock like unusual option activity. Investor Business Daily. See, this is what reveals what hedge fund managers and other large institutions are doing at critical moments. So let's take a little example here in Walmart. The stock went from $93 to $100. And we're going to show you why buying out of the money calls is your best option out there. So stock went up. Would you rather make 93% or would you rather make 390%? I think it's pretty self-explanatory. It's kind of a rhetorical question. Obviously, we'd all rather make 390% instead of 93%. Well, let's go over two simple, easy trades. Okay, trade number one, you buy the Walmart 90 call. Okay, you buy those for $7.25 over the course when the stock goes to 93 to 100. That contract that you bought at $7.25 goes to $14. Nice trade, well done. Give yourself a pat on the back. You turn $3,000 into $5,700, which is good for 93%. Or you could have bought the same equivalent out of the money calls. And this is why I trade out of the money calls. So you can see here, you could buy 4 of the 90 calls, or you could buy 60 of the 105 calls. The 105 calls went from 50 cents to $2.45. The same $3,000 if you bought at the money calls that were expensive calls that would cost you $7. Okay, 4 contracts to $7.25, $14.50, $28.50. 60 contracts at 50 cents is still the same $3,000, but those out of the money calls are going to make more money, put more cash in your pocket. So you would have made much more money if you bought the out of the money calls. You could have turned $3,000 into $14,700. So this is why out of the money calls, if the stock goes up, you will outperform in the money calls. High delta. High delta means the price change is big, but you have small percentage gains. Okay, I'll show you this one example today in Nova today. So Nova, we call this trade to subscribers. I'm sure some of the subscribers got into this today. So the February 11 calls, as you can see here, Nova February 11 calls hit right here on one of my scanners. I did set of subscribers. Some trader somewhere in the world bought 2,131 Nova 216 2024 11 calls for 25 cents. Those calls, okay, the stock has gone up from 9.35 to 10.35. Nice movement. Stock's up about $1. The Nova 11 calls have gone up 100%. So if you were in the trading room this morning when I called out this signal, you could have potentially made 100% profit on this trade. 100% profit on this trade. One trade from the signal. This morning, I flagged this to all my subscribers of the trading room. Once again, we're going to give you a chance to get into the trading room for the cheapest price we've ever offered it before. So my ideal sweet spot, 30 to 70 cents. As you said, those Nova calls were 25 cents. They had a lot of risk on them, but, you know, it paid out. $25 per one lot. You could have got into that trade. Just today, you could have made 100% profit on that trade. Not bad, not bad at all. So trades that I like to trade are between 30 and 70 cents. with a delta between 15 and 45. We just proved on the Walmart example, you can make a better ROI on out of the money calls. So 15 to 45 price point. You can even go as cheap as 20 cents. Yesterday, I had some trades that were 10 cents and 12 cents that went up 50% profit yesterday. So that's our sweet spot of what we're looking for in call options. These are some of my testimonials. A while back, David B said K-Web up 110%. Raja said, thank you, AK, you're the best. David said, AK, you rock. Wakar said, ARKK, 80% profit. John S said 172% profit on Baba. Tim said K-Web, 350%. That was all in the same day. And I can show you actually the screen of the actual trading room right now. So currently right now, there's close to 100 people in here. It's not letting me show it for some reason, but there is close to 100 people in it right now. When I run it, there's probably around 150 people. So I guess I'm gonna be a little bit short on time, but let me introduce you to the live trading room.
Hey, Andrew, are you there? You're muted. Um, can everyone hear me?
I think I'm good now. Sorry about that.
Okay.
I sent you an email.
Yeah.
I think my mic might have come undone or something like that.
Okay. Yeah, I can
Can
hear you now.
I start video again?
Um, yeah, you're still sharing.
Okay.
With
So
the
let me introduce you guys to the best live trading room in the world. I apologize if my mic went out for a minute here while I was talking. So what we're offering you guys today is a chance to join the trading community. Like I said, never trade alone ever again. And we're going to give you an opportunity to join for the lowest price ever offered. And what this is you can come in here for an hour a day. A lot of subscribers will just come to my trading session. They'll come in for an hour a day. If you want to stay there all day long, you can stay there all day long. It's open from 9 p.m. Eastern to 4 p.m. 9 a.m. Eastern to 4 p.m. Eastern all day long. We have 4 great moderators that run the trading room. Like I said, I run the trading room for the first hour of the day, but you can come in as much as you want, as little as you want. Give it a try, give it a chance. If you like to trade options, if you like to actively trade, if you like to trade a lot of different positions, if you like a lot of different ideas, we're going to give you 1 month of our price for the lowest price ever offered. We're also going to give you a VIP mentoring session with myself. And last year, I flagged over 500 100% winners in the live trading room. So this is the link for the live trading room. It's a $598 value. It's a webinar, so we want to make sure as many people as possible that want to get in can get in. So you're going to get 1 month, not 1 year, 1 month of the live trading room. Plus, once a month VIP at mentoring for only $99. You can sign up on the link at optionhacker.com. Everybody that wants to get in can get in. Try it for a month, guys. It's only 99 bucks. It's going to cost you $3 a day. I know I spend $6 a day on coffee. I spend $12 on juice, $30 on lunch. Make sure you guys sign up. We do have limited spots. I think we have about 30 spots available. but everybody that wants to get in should be able to get in. Once again, 1 month of the live trading room plus the group mentoring, 99 bucks, guys. Here's the link, optionhacker.com/trade 2024. Make sure you guys sign up. I'm so excited to get everybody part of the room. We're going to start it. You know, you can get in as quickly as today. I'll be on tomorrow morning for opening bell. 99 bucks, guys, gets you in. You'll be able to watch me trade real time, live with real money, all derivatives, optionhacker.com/2024. Make sure you guys sign up. It's really fun. It's exciting. Just try it for a month, guys. Okay, try it for a month. I almost guarantee you're going to love it. optionhacker.com/trade 2024. Give it a month. You're going to love it. That's all. Thanks, everyone, and have a great day.